In today's insurance market, there's been a lot of changes and there's a lot of headwind that we're making, but unfortunately, it's going to be several years before we get out of all of these high increases in prices. I was looking up earlier today and we found out that average on auto, we're up about 17% across the US. So the prices have been skyrocketing and it's not the end, it's going up some more. Houses have gone up a little over 10% in general, and those are the ones that are actually causing the biggest issues. So we're going to dive in and go over some of the articles and some of the updates on companies that have left the market, that things that you should be aware of, and some important pieces if you're going through a lawsuit with your insurance company, what you have to watch out for. So let's dive right in and start out with the article, which is Allstate. They just finished a lawsuit and settled for $90 million. Talk about hitting the guy when they're down. Allstate is really not feeling it right now. Now, this actually was an older lawsuit. So the claim that we have here is that they were inflating the numbers. So essentially what they're saying is that Allstate was stating that they had lowered their prices for good reason. Well, the shareholders lost out the most because what they ended up doing is they had a 38% decline in their operating profit because they didn't price the product correctly, and the lawsuit saying they did it on purpose so that they could get more business in, and because of that they lost more money. Now, this was actually several years ago. This was back, I believe, in 2015 is when this started. So 2015 this happened, and they ended up losing about $2.8 billion. Long story short, shareholders sued them, and Allstate basically settled the claim for $90 million, stating that we're not deeming fault, but in order to get rid of this lawsuit, let's just move on. Let's just go forward. Here's the 90 mil. Now the lawyers are actually expecting to get about $22 million, which you're seeing here in legal fees, and about almost $5 million in settlement expenses. The other thing that a lot of people don't realize is because there's so many shares that Allstate has, people that are getting it are only getting 46 cents per share. So unless you own tens, if not hundreds of $1,000s worth of shares, you're really not getting the value of having that lawsuit come into play. The next one is going to be the Michigan DIFs. So Michigan Department of Financial Services actually put out a statement that is asking Michigan drivers to drive safer, which is kind of a moot point because, one, nobody's listening. We're not going to lie. Michigan is so frustrated with their personal injury protection that they haven't even figured that part out. They've got a new fee this July called the recoupment fee of $48 per vehicle on average, and they're already frustrated. So driving safe isn't the first thing on their mind, but we've seen a very large increase in the state of Michigan. So we're seeing a 4% increase overall vehicle crashes, 28% increase in work zones, which is, you should be driving better there, guys, including a 50% increase in work zone fatalities and a 4% increase in motorcycle fatalities. So Michigan is about to lose their little claim to fame, which was they did drop 1% last year, and they lowered the 2022 accidents and deaths, and all of the numbers actually fell by about 10%. So Michigan was excited about that, but it looks like those numbers are going back up. If you're in Michigan and you're looking for auto insurance, I have a link in the description below. Honestly, most states we insure, but Michigan happens to be our home state. So if you're looking for a good deal there, we can help you out. The next article is that we're talking about Kemper. Kemper joined the market and tried to really just do a competitiveness in the market. Well, they lost. They're actually backing out and canceling part of their insurance policies. So let's go a little bit further in depth and explain this. So if we look at this, Kemper's actually playing this game a little bit smart, even though a lot of these companies are losing their shirts with the claims they're having. They didn't prepare and they undercut the prices to get all this business, not realizing that all of these things were changing: cost of metal, cost of material, cost to get the car fixed, the time it takes. All of these things are happening. People are getting in more claims, just like Michigan is doing. Most states are having this issue. Also, the weather, the hurricanes, the tornadoes, all of the things that are happening that shouldn't be happening are actually going up 20 to 30% as far as these claims and the repairs and everything. Well, Kemper's realized that, and they also are backing out across the board. This isn't I'm leaving Florida, I'm leaving California. This is, we're just stopping or pausing our product for right now. So what they're doing is they're essentially stopping a certain type. They're actually doing their preferred home and auto, which most companies have a preferred and then a standard. just like you would expect, Progressive is kind of that standard company. And then they have other companies that are preferred. Farmers has a company called Bristol West. That's their preferred as Farmers. And then their non-standard, or their specialty lines as they call it, is going to be that Bristol West product. So they're essentially reducing this. And now I made a statement that said this is actually a smart move for them, is because look at the numbers that they came back with. So they underwrote, their underwriting company had about $500 million worth of written premium. They actually improved by being tighter. Now, that's probably where people are going to complain, because when they tighten up the reins and say, this is a gray area, we're not paying on these claims if it's not covered correctly, and where a lot of companies would just eat the cost of fixing a car or fixing a home, they're being tighter with this. So Kemper has taken their losses and they went to 10.8 million compared to 39 million the year before. So they're showing a really good report. Now, this is Q2 versus the 2022. So there's a big difference in cost, but they are cutting back and saying, you know what? We see the signs ahead of time. Instead of us just going bankrupt like all these other companies, let's make a move fast and let's try to make these profits come quicker. Now, this is something that is all companies, so you're going to see this happen a lot. They're not going to do any changes. They're not going to update anything. They're essentially waiting out the storm. When you have a hurricane come through, you hunker down, you get in the safe zone, and you just wait. That's what Allstate, State Farm, Farmers, Progressive, Safeco, Liberty, literally every company I can think of, Nationwide, Kemper, these guys are backing off their main products because there's too much risk in the higher level product, not enough profit. You may be like, I got the best deal, I'm a great client, but that 50-year-old, which was the perfect fit scenario for companies, is a similar risk and drives in a lot similar areas as that person that's paying 20% more because they have a ticket. So that person with the ticket doesn't necessarily look better, but the risk tends to be similar based on that. Now, I get it, Mark, you're an idiot for saying that, but it makes sense if you think of it in depth. We're not going to go that far in depth today. The next up article is an agent actually got arrested in North Carolina. So what essentially happened was the agent frauded the insurance company, which this is not uncommon. This actually does happen. So your friend gets in a car accident, didn't have insurance. You are their best friend. You're helping them out. You backdate the insurance. So you pretend that you sold the policy 3 days ago, 4 days ago, 5 days ago. Some companies will let you backdate, but you're supposed to sign a letter of no claim or no solicit or whatever the thing is. It's basically a letter stating that I haven't had any accident. There's no new damage on my car since I haven't had insurance. And you put that time frame in there. Well, this agent actually did the opposite, backdated it knowing that they were going to file a claim, turned around, filed a false claim. They're now committed fraud. The downfall, and a lot of you are going to say, oh my gosh, put the stakes up and let's burn this person's house. Like, this is a bad thing. This is causing the industry. Things like this is what causes everybody's price to go up. This is not good. Now, what we're trying to do is prevent this. So what they're doing is this will be taken care of. If you are an agent, you cannot have fraud on any record that you have. So this agent will never work in the financial industry again. We can follow up, but you can promise this. Odds are they're not in the banking industry. They're never going to be in insurance. They've essentially pegged themselves as not being a fit for most companies. That being said, they're going to be fine, right? They're going to move on. Because look at this. Here's why a lot of insurance agents fraud people. The average agent makes about $45,000 to $50,000 a year. The top agents are making 100 plus a year, and those guys are selling like crazy, right? That's their big thing. But a lot of agents, that means the average is 50. That means a lot of agents are making 10, well, not 10. They're making 25, 20,000, 30,000. With this inflation, that hurts. For those that are building up to get to the 50, to get to the 80, it's a long path. The insurance industry is start basically in the mailroom. You start making a little bit of money, you build a book, you build some renewals, you get some business. You're essentially a partner depending on the company you're with. And if you're at that lower level, what's the risk? You think, okay, I can do this, I can do that. I hope this isn't one of the premier agents. Anyways, that is unfortunate, but it's part of the game that we got to catch them. And then our last one also follows suit with social media claims. So here's something that you should definitely know as a consumer. This is actually something that some of these investigators are doing. So if you file a claim, let's say I broke my back in a car accident, I can't walk, or I'm injured to this point and I need $5 million, which actually is one of these claims here. And what they're doing is some of these investigators are going to your social media and they're looking at your photos. Some people are caught. So look at this person here. Wawanisa is actually the one that they're going through and interviewing one of their attorneys. And what they've done is they're going to look at what they call sock puppet accounts. So they're going to make up a fake account. They don't want to go in under the investigator's name or Wawanisa's name or State Farm's name or whoever. They're going to go in and kind of make a fake profile. But what they're doing is they're looking at your photos and videos. Now, there is a legality that they can't use some of them. So if they just friend you to look at it and you accept the friend request, a lot of these courts are throwing that out completely because they're saying, nope, that's malicious, that's like hearsay, da 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 da. Well, what they're also fighting is that in this case, I think somewhere in here they basically had somebody that had a jet ski and they caught him. They saw the pictures. Well, they claimed, well, we had that jet ski. That was a 2-year-old photo, so you can't do that. Well, they're going to throw that out. However, the investigators are smart enough to look it up, find out who owns the jet ski, talk to that person, get the registration. In this case, the person that had this, the brother-in-law or family member had bought the jet ski 2 months prior. They registered it. That showed proof that that photo was recent and not a past one. Let's look at this last case here, which was probably the bigger one. So this person basically was going on a buggy. They were riding piggyback on their spouses, and this is somebody that was claiming $6 million payout because they had hurt their spine. They're giving piggyback rides. This is complete fraud. This is another reason your insurance is high. Not even home and auto. This could be medical insurance, health insurance. This type of stuff is good to find. But for those of you that are trying to file a claim to avoid having false allegations, keep your social media private. Don't have your spouse post things on your behalf. Don't be careful of what you're doing so it doesn't look incorrect, because the right angle can make it look like you're doing something that you shouldn't be doing physically. Those are the news today. If you guys have questions or comments, let me know what your thoughts are. Do you think it's okay that they use your social media to do this type of posting? If you are looking for other insurance-related advice, tips, company comparisons, go ahead and like and follow the channel. We do lots of things like comparing State Farm to Allstate, Esurance to Progressive, and all of these types of options. I'm Mark with Think Insurance. I'll see you in the next one.